I think the biggest edge I have is bringing in the fundamentals, and especially with small caps, because a lot of them have agendas to raise money. A lot of them are pretty unsuccessful companies, and they can't survive without raising more money in the form of dilution and things like that. So that's really an edge in small caps, in my opinion. So it's something I've got to take advantage of.
Welcome everybody to another Funded Trader of Trader Pool. Today, Charlie is with me. How's it going, buddy?
Yeah, very well. Thank you. Thank you for having me.
Good. Yeah, thanks for coming to this interview. Charlie passed the evaluation, the mini buying power, right?
Correct, yeah.
Okay, so for those of you not familiar, you basically traded on a simulator with $20,000 of buying power, no PDT rule. And once you pass the evaluation, you actually get funded. And now Charlie is ready to split the profit with us. So tell us a little bit about the progress, about the process that you've been through.
Yeah, so I've had a few evaluations, which I originally was unsuccessful with. So it was a bit of a learning curve for me, getting used to some of the risk rules and just being familiar with the different ways of and risk parameters. It sort of taught me a lot about my risk management, and I think I've come out a better trade as a result of it. So yeah, I started this one and was lucky enough to get through pretty well at the end of it. So it was great.
Amazing. And did you trade before that? Did you trade on your own capital?
Yeah. So I've got a smallish account of my own as well. So I just wanted to try and maximize some buying power, and saw Trader Pool and tried to get past the evaluation. So yeah, great.
That's amazing, and congrats on that. Let's talk a little bit about that feeling, trading your own capital and trading with us. Like you said, the risk rules, try to understand maybe the rules, the trading platform for the guys that listening right now and maybe trying to go through the same process, right? What's the difference between trading your own capital and the evaluation?
Oh, for me personally, it was, I was still learning. I've been trading for probably 2.5, 3 years now. And with my own capital, I'd sort of give myself a little more rope in terms of, I primarily do short selling and small caps. So sometimes it's possible to get caught on the front side of a short. And I would typically give myself a little bit more risk to play with my own stuff, but just it was all about sizing for me and just waiting for structures to form within the charts, having something to risk off, and then only adding to winners instead of trying to keep shorting the front side until you get a bit of a breakdown to cover yourself. So it actually made me a better trader going through this. It's been very helpful. So
that's amazing to hear, and you're not the first one that's saying, sometimes when you watch from the other side, or when you're only trading your own capital and not familiar with prop trading and trading someone else's money, you don't really like the fact that you have risk rules, right? Because on your own capital you can do whatever you want. There is no daily loss, no max, nothing. You just go in and do whatever. And only when you start trading with a prop company, only then you realize that the rules are actually here to support you and help you as a trader.
Yeah, correct. I've sort of seen my win rate go down a little bit, but my risk to rewards a lot higher just going through this. And I think that's just about really picking the right stocks to trade and being patient, but also sizing in appropriately and being willing to cut your loss if for a smaller loss, and then just getting ready to reshort if you have to. So I think that's probably the biggest change, trying to get a little bit more risk reward with a little bit of a lower win rate. It's been quite helpful for me. So even with my own capital, I did sort of bounce around a fair bit. I'd have quite a large or a better win rate, but then I'd have one sort of larger loss, which with Trader Pool, I've sort of eliminated that, which has been great.
That's amazing. I'm going to share my screen and show your dashboard. For those of you not familiar, every trader get his own dashboard, and you basically see the progress and the process that you do with all the stats and good stuff. So just so you guys can see that, here it is. So this is your account, basically the limited edition, right?
Yeah, the new limited edition one, yeah.
So that's also great to see that you pass it. You know, again, now we just launched it, the limited edition. This is basically a mini buying power when you trade $20,000 of buying power, and we lowered the target to reach that target and some other parameters. So in that case, you did it very nicely. Also, the chart looks great. I mean, that's very strong, and you can easily see your consistency here. Some push to the upside, then consolidating, another push, very solid. So tell me a little bit about your trades. As you said, mostly short seller.
Yeah, for the most part, I am trying to get a bit of a buy the dip long strategy going, but I tend to find myself being a little bit early with those, and my win rate isn't the best. So still learning in that regard. But I think for the most part, my strategy is largely, I trade mostly pre-market because I'm in Australia, so I do trade the open as well. But for the most part, it's pre-market, and you do get a lot of pop and fail type pre-market moves. So it's just about, you can have some quite large runners. It's just about waiting for a bit of structure to form, something to risk off, like a lower high, or you might have an extension, sort of like a new breakout on intraday, and you'll have a lot of longs pushing for that, trying to buy the top and for more of an extension, and then it's a lot of the time you see a fair stuff. So, and it's when that stuffs and fails and all the longs are underwater, that's when I tend to open my short position and hopefully ride it back down. So, but I try to use relatively tight risk in this latest evaluation, and it seemed to have paid off. And then I just had quite a few larger winners, which were those extensions in the chart. And it just was much smoother ride this time.
Yeah, and also I got two things to say here. One, it's funny how most traders are short selling those penny stocks and not looking for the upside, or maybe like you are looking for the upside.
I think it's much more difficult, especially in my opinion. A lot of these small cap companies aren't typically the best. Sometimes you'll have an agenda form, so I'll look at dilution and things like that, and maybe the company, I might see they have an agenda and they want to push a price to raise money or get to a warrant price or something like that. They might have a really low float, so I'll tend to avoid those shorts or just have a tighter risk. But I think for the most part, especially in the pre-market, you do see these either fluff news or some sort of news pop without news, and they do tend to fail relatively quickly, or at least fail and then try and trap shorts in and go again. So I think for me, my edge would be on the short side. I definitely think it would be great to be able to long small caps successfully. It's just a bit of a larger learning curve for me personally, and I think you just have to be very patient with longing and making sure you've really found the bottom and it's starting to curl. And I tend to be a little bit early with my longs, so it's just about getting that patience.
I can relate to that, definitely.
Yeah.
And I mean, did you see, I don't know if you watched one of the videos that I did with Arbnor, one of our funded traders.
I think I did see that one. I can't remember the detail, but yeah, I believe I did watch that one.
So he mentioned the fact that you need to build your cushion, and that's what actually got him a couple of thousand in profit, just because he always kept a cushion. Did you see the same? Did you try to work on that?
Yeah, definitely. I think I'd try and set my risk, and if I had a few wins on that particular day, then I could elevate my risk, and then I'd see a few larger wins. I think it's very important to just size down initially until you do build that cushion. And then, you just got a little bit more to play with. In saying that, I would only really sort of raise the amount of shares I'd be trading only if it was a really good opportunity. So it's just about being patient and really striking when when it's most in your favor, and going from there. So
nice. So I'm sharing the screen again, just touching that point that you mentioned about the quantity, right? The number of shares. Can you walk me through it just a tiny bit? I mean, and the guys that listen in would love it as well, I guess. Just the fact that, how do you size? How do you decide how many shares to buy and such?
Yeah, so I mean, typically I'm risking off sort of a previous high maybe, and I would tend, unless it's a really good opportunity that I really feel is going to fail, I would tend to only add to the winners. So, and add on, like, I might, for that particular one, I might only have one increase, but sometimes more. So it really depends on how the structure of the chart plays out. Could only be one single entry and one single exit. But a lot of probably the more larger winners, it is an add on a lower high or something like that. And then maybe moving risk depending on how it's performing. So I think, yeah, it really depends on each particular stock and the time of day I'm trading it. So a lot of probably my best trades might just be a bit of a pump and a dump in pre-market. So I tend to see there's some fluff news or just no news. Something will just elevate sort of 50 or 60%. And then because it's got no news and no real agenda about it, maybe someone else is pumping the stock up, and I can see that the company has a low cash position and they need to either use some of their dilution to raise money. People might be selling into other people buying and things like that. So it tends to be relatively quick moves in the pre-market. If I'm going for something at the open, it'd be something that has a lot of extension in pre-market, and then they really need cash and they've got dilution and things like that, or bag holders from previous days of running, and that really gives that selling pressure. So it's when I see that selling pressure, then I'd be trading that open probably 15-20 minutes after the open, when you really get a pop and a typical fail.
And would you say that most of your analysis based on the technical side or the fundamental? Is it
both? About 50-50. It is technical in that, looking at the daily chart and really getting levels and things like that. But I think the biggest edge I have is bringing in the fundamentals, and especially with small caps, because a lot of them have agendas to raise money. A lot of them are pretty unsuccessful companies, and they can't survive without raising more money in the form of dilution and things like that. So that's really an edge in small caps, in my opinion. So it's something I've got to take advantage of.
Nice. And did you ever try to use the same, at least on the technical side, the same strategy on larger cap?
No, I'm trying to learn large caps now a little bit through a mentor I have, but I haven't quite got there yet. I might set up maybe a simulator account to try and get time up under that. I wouldn't really want to put a lot of capital into it. I guess it's probably better risk-wise than a lot of the small caps, because you don't either get that quick spike or quick drop that can really stop you out or something like that. But it's just something I haven't learnt properly as yet. So it's something I'd definitely be open to.
I see so many traders, right? Funded traders, and also on the evaluation. On the technical level, most of them trade the same way, right? Because you're shorting those penny stocks and the other guy is shorting Tesla on the same concept, looking for key levels, looking for those things. So that's also interesting to see someone that is fully focusing on small cap, trying to shift to larger cap, and to see if he can find the edge there as well.
Yeah, definitely. I think it's something I'd definitely be open to, and we'll be working towards. Hopefully get another trader pool account with a bit more buying power, and that'd be great for some of the large cap stocks.
Sounds good. So before we finish here, any tip or advice you want to give someone that, just started the evaluation?
I would say just go slow initially, build that buffer like we were chatting on before. Really, I saw a lot of the things I failed at earlier is I might have a small loss and then I want to make it back quickly. So I'll up my size, probably in a trade that isn't quite the best, doing a bit of either revenge trading or a bit of FOMO or stuff like that, things that people always refer to. And you've just really just got to keep that size small until you build that cushion, or until you get something that you can size into your winning trade, as opposed to trying to size into a loser to make it back. So you're better off taking that loss quickly and then sizing back in and getting that win after, without taking a larger loss or having your risk parameters come up and having to wait for the next day. So
that's true. Yeah, you gotta have those. Alrighty, Charlie, that was great. Hopefully, for the guys that listen in, if you have any comments, any questions, feel free to drop them in the chat, in the comment box. And also, are you on Discord? If
yeah, I am. Yeah.
So guys, ask him as well on Discord. You just join the hub and you got this icon for the Discord channel. Alrighty, thanks so much, Charlie.
Thanks for having me,
It's been
Michael.
a pleasure, and best of luck on the funded account. Hopefully we will do another interview once you pull some payouts.
Yeah, I hope so. Thanks very much.
Thanks so much. Bye for now. Bye, guys.